Thank you all for joining us. This is a series of webinars hosted by CoinFirm. What we're talking about today is institutional DeFi, and if banks are positioning potentially to prepare to stake across some of these protocols. We've seen an absolutely tremendous amount of innovation in this space. This time last year, it was still very much grassroots, 400 to 600 million locked across these various protocols, big flash crash. And in a short period of time, we now have this incredibly interconnected network of protocols doing some very, very interesting things. I'm delighted today to have a very esteemed panel. I think Behemoths would probably sum it up quite well in terms of the people we have from within this space and looking to enter this space as well. So before we jump into it, perhaps I can get you guys to introduce yourselves and also just give me a few lines about your particular skew on DeFi and the access to that. So if I go from left to right, Townsend, let's know a little about yourself.
Sure. Hi, I'm definitely not a behemoth in this area, but I'm more of a novice. But Townsend Lansing, I'm head of product at CoinShares, Europe's largest digital asset manager. I focus in particular on developing financial products linked to or with digital currencies as the underlying. I've been in the industry for almost 20 years, started my career as an attorney, US securities attorney to be exact, and been the last 15 years doing listed products. My interest in the DeFi space is very much on the extent to which we can build financial products that access the revenue opportunities or otherwise have the governance tokens as the underlying. I think in a lot of ways, my particular perspective is one of, I guess, unfortunately, an institutionalist, if not someone who believes in intermediation, which is obviously unusual in a decentralized world. And then to look at some of the issues that we expect our investors to focus on and to be interested in when we actually, or to the extent we actually try to push out product referencing or allowing for a kind of DeFi style rewards.
Fantastic, that's great. I thought you might be our more conservative panelist, Townsend, maybe fact checking a few things that come up, maybe not the most buoyant, but that's great, that's good. It's good to have balance in our panel. Let's bring in one of the co-founders of CoinFirm. Jakub has been spearheading a lot of the DeFi efforts that CoinFirm have been doing in terms of the Oracle and also some of the reports. Jakub, do you want to talk a little bit more about your work and just a quick introduction?
Yeah, sure. So as Ryan mentioned, I'm co-founder and CTO at CoinFirm, and currently I'm managing in my opinion, one of the greatest achievement in terms of the approaching DeFi that CoinFirm has, AML Oracle. So we've built an Oracle that is able to provide AML data in an on-chain manner to DeFi services. Why we think it's important? Because we think AML is important, and we think it will be required to, for today's topic, at least as a part of the discussion. So happy to be here and happy to discuss with such a great panelist.
Who'd have thought it? A co-founder of CoinFirm, the AML platform, thinking AML might be a little bit important for us to onboard some institutions. So wonderful. Samir, all the way coming in from Brazil. Would you like to introduce yourself?
Great, Ryan. Thank you for having me. It's a pleasure to talk with you guys. So I'm CTO of Hashdex. Hashdex is a digital asset manager. So we are managing multiple funds, both here in Brazil and offshore as well, all focused in crypto. Our main mission here is to provide access in what we call simple, secure, and regulated way to crypto, right? So, I mean, our main focus right now is being Brazil, but we also have offices in New York and California. The first product that we launched was actually an index to provide a broad exposure to the market. We created the Hashdex Digital Assets Index, and eventually we entered in a partnership with Nasdaq to create the Nasdaq Crypto Index. And I'm glad to announce here in firsthand that we just got approval to launch an ETF here in Brazil based on this index. So it came out yesterday. and we should be, launching in a few weeks the first crypto ETF in Latin America, right? So it's a very, I'm very happy to share this news with you guys here. And basically our interest here in DeFi is in this goal that we have to provide access. We think that DeFi is maybe one of the best opportunities we will have in this industry. And Bitcoin is a couple of years. And my background, I've worked more than 10 years in financial markets infrastructure and electronic trading. So before joining Hashdex in 2018, I was working building a new stock exchange here in Brazil. And one of the things that fascinated me and converted me to crypto was when I started to explore the potential of smart contracts to actually decentralize and make the financial markets more efficient. And that's what was, way before we even have automated market makers or lending platforms completely decentralized. And now that we see this infrastructure being built, it's fascinating. And what I can say is that we've been trying to explore ways to solve the problems that institutional investors have to have access and to start joining this revolution, let's say.
Amazing, fantastic. Congrats, Samir. I love how you held that back until you were live on our webinar at CoinFirm. That's brilliant, because we didn't know that before you came on. So excellent stuff. And last by no means least, I think it's best to introduce you as maybe a gamekeeper turned poacher. It's like the reverse, ex-Goldman Sachs and now into Aave. Ajit, do you want to introduce yourself in a few lines?
Yeah, thank you for inviting us to this webinar, Ryan. So I lead institutional growth partnerships and strategy for Aave, which is one of the world's best known decentralized finance protocols, set up by Stani Kolichov and Jordan. We've been in this space for 4 years, and we are one of the best known DeFi protocols with over 5.5 billion in liquidity and borrowings and assets and borrowings, over 60,000 users, and in sort of multiple geographies and so on. So Aave has been leading the charge on institutional adoption of decentralized finance for a while. We are currently integrated with some of the world's leading custodians, listed on some of the institutional venues, supported by a number of regulated entities and so on. And also, a number of fintech partners have integrated Aave protocol in their backend. So my background, I come from, I started my career in internet, Web 2 core protocol development with Belcore. And then I went to Goldman Sachs to work on, large scale risk pricing, derivatives pricing, risk calculations, went on to work for Barclays in risk data systems. Then did a bunch of regulatory change and compliance program work when everyone was doing compliance after the financial crisis. Went to PwC, started the blockchain business in 2015. So in the last 5.5 years, I've been taking crypto and blockchain technology to financial services institutions around the world, and sort of, and with Web3, which is kind of this whole new architecture for internet, we are starting to see the potential, and Aave is at the forefront of driving that transformation towards open internet-enabled financial services. So that's kind of, where we're building that backend infrastructure for the future of finance.
Fantastic. Thank you all so much for joining us. Just before we kind of kick things off, just for the audience, we'd like to keep these as far away from traditional webinars as possible. So if you do have questions that are relevant, please do chuck them into the chat box. If they're good enough, we'll ask them, we'll interject, but we will try and go through a load of those at the end of the webinar as well, depending on sort of timeframes and where our speakers need to get to afterwards. So jumping straight in, if we look at traditional finance, we have some really terrible interest rates at the moment. If we're savers, if we put money in our bank accounts, under 0.5% and what have you. Yeah, in the DeFi world, you know, I've been able to achieve maybe 8 to 16% in a relatively secure way across some of the protocols which are out there on stable coins like USDC or Tether. We've now got to this position where, you know, there's over $40 billion locked across these protocols. Banks like Yield, why aren't they already here? You know, maybe we could go through some of the potential barriers for some of the larger institutions. Townsend, perhaps we can kick off with yourself, being very much at the forefront of this.
Yeah, I mean, I think, you know, in terms of talking to some of investors, but DeFi, I mean, I think the first thing, by definition, correct me if I'm wrong, presupposes people actually hold underlying digital currencies, which is still a big step for a lot of institutional investors, as well as the large banks who are still developing the kind of the internal capabilities. You know, obviously you saw recently Goldman had exited, it's come back in. We're seeing a lot more institutional adoption across that board, but you know, I think in a lot of ways, DeFi is probably a second order risk allowance, you know, and they have to get over the first hurdle, which is, you know, how are they going to hold digital currencies? How's that going to work? And I think that's probably the initial kind of boundary or barrier to adoption at that level. Then, you know, I think as we talk in more detail, there are a lot of diligence questions, you know, in particular, we're getting questions from investors when we talk about products that share staking rewards, you know, what's going on, what, you know, why are people lending assets, what are they being used for? Is it, you know, is it just for the internal economy of digital currencies, or for the real economy, are people borrowing money to build houses and so on? Then you get questions of what's the legal consensus and the framework of a smart contract, what's the credit risk, you know, how does that work? And these are all things that we're trying to answer, trying to investigate ourselves. You know, what's the relationship? Is there a contractual relationship between a validator and a denominator, and so on? So I think there are a lot of questions that, you know, institutions still have around the process, and, you know, hopefully we'll start to answer those and get more and more people comfortable. And as adoption of the underlying assets becomes more prevalent, there'll be more opportunity either directly or through, you know, product providers like ourselves who are trying to kind of intermediate that process.
Very good. And Samir, I mean, obviously you're almost there. You know, you're about to have a Nasdaq listed ETF. You're looking at this area. You know, what are sort of the key obstacles that you guys have been looking to kind of navigate to be able to sort of bring this to fruition?
Sure. So first, I think the main obstacle, like Townsend was saying, is education. I mean, people understand the crypto, right? First of all, so we're in the first level where institutions are coming to crypto, right? And that's where players like Hashdex or CoinShares and our efforts in ETFs and ETPs to bring this institutional investors to start seeing the potential of crypto, right? And starting to understand the technology. Once they understand the technology, then they can start exploring new levels of abstractions, the layer 2s or service on top of that. And I think when they start exploring that, the main problems that they see is the unknown risks. You know, when you have institutional investor, I mean, deciding to, for instance, to stake in a protocol, they need to understand what can go wrong, because they need to explain this to their clients. You know, and they need to have all the answers to not be caught in short bed. So I think that's the main problem: understanding the risks, understanding what are the things that can go wrong with this market, what is the legal structure, and then there's more the pragmatical things like AML and market infrastructure. So on market infrastructure, how can I invest this in a safe way? How can I do this from assuming that I'm working with custodians, for instance? How can I interact with those smart contracts directly from my cold storage, right? From my custodian. So if a bank is providing custody for crypto, which I think was something that we'll start to see in the coming months, And we're starting to see this movement in the US. We're seeing this in Brazil, and I think this will happen in other places as well. Banks trying to offer access to crypto, just like PayPal is doing now. So once they start providing this, how can they provide access to DeFi directly from their custody infrastructure, right? And so there's this layer of that we, I mean, you see that there's still some infrastructure that needs to be built, right? And the other main challenge is AML. So how the regulators will see this, how law enforcement will see banks being involved with DeFi, and the main challenge on that is how can you, I mean, how can you regulate a software? How can you regulate a smart contract, right? And this is a long discussion. It comes I mean, comes down to free speech in the 90s when people invented the PGP protocol, and I mean, there's no way to control a software once it is live and once it's running autonomous on the blockchain. And maybe the regulators will need to rethink how they assess AML risks and how, I mean, how can we interact this, because this future is coming, right? With the institutions or not, this is coming. I like to compare this with the internet. So I'm sure the media companies didn't want the internet to exist, right? They wanted to keep their old business the way it used to be. It was very profitable for them. And with the internet, they needed basically to reinvent themselves. And DeFi will bring this to financial institutions sooner or later. It's not a matter of if they will come. It's a matter of when. It may take more time because it's a highly regulated industry, but I think it will happen eventually. And as you have players like CoinFirm working on those kinds of solutions and trying to bring comfort to the regulators, and or at least for them to understand how they can assess risks on a decentralized platform, because the nature is different, right? Because on one hand, you don't have all the controls and the gates that you have in traditional banking system, but on the other hand, you have full auditability. You have, I mean, full control of all the money, all the flows of assets everywhere. So you lose control on your side, on one side, but you gain traceability on the other, and that can make an effective AML policy as well. So I think those are the main challenges. Once they understand that it makes sense to get involvement, then they need to clear out the risk, and then there's the credit risk, the cybersecurity risk, the protocol stability, the liquidity crisis. What happens if there's a big liquidity crisis? What will happen with the collaterals? And then we come to infrastructure and AML.
I think you make a really good point there on the AML side, where DeFi is kind of is presented as almost a positive and a negative compared to the traditional finance world, right? As you say, you've got this traceability, you have this openness in terms of what's happening within these protocols based on addresses. Yeah, on the other side, you also don't have so many traditional AML procedures which are in place, as this thing is just absolutely exploded. Jakob, maybe you'd like to talk a little bit more about the work you've been doing to maybe address some of these concerns and to kind of position to make this, maybe a little bit more of a safer space to come and play.
Yeah, for sure. So I couldn't agree more with Samir. So we see two major type of challenges, technological and as an infrastructure, and type of how banks will access the DeFi's, which is really interesting from the purely technological standpoint. Obviously, if we take some big bank as an example, they won't use MetaMask to get USDT and invest into some liquidity protocol to get yields. They need some type of infrastructure. They need some type of access, and something that works for individuals doesn't necessarily work for big institutions due to distribution of responsibilities, auditability, etc. I think ecosystem goes into the right direction. So if we compare how easy it is to use certain protocols, certain solutions right now compared to 2 years ago, compared to 8 years ago, where you had to micromanage inputs on Bitcoin-like chains to build a transaction, etc. And I think this is evolving and this is happening. And regarding AML, obviously, there is some trade-off, and the trade-off is clearly visible. I think we're past the point where I remember the discussion in 2015 where Bitcoin never will be compliant. You cannot have clear Bitcoins, or it cannot be traced, audited, etc. You obviously don't have control, and I think that is something that big institutions can fear, because you cannot charge someone's account, you cannot take someone's funds by directly charging their account. However, you have all the tools, all the traceability to know where you are getting these funds from, what are the risks, if this is linked to any sanctioned addresses, sanctioned countries, sanctioned exchanges, and that might or might not be good for certain banks. We obviously heard a lot over the years that certain banks were specialized in not feeling certain regulations right, and helping launder funds. So that might be also the big scare of them, because right now, if they make a bad decision today, they can be put into responsibility 5 years later, because that information is still there. The transaction chain will never disappear. So I think that might be why they're slightly more hesitant than compared to other technologies. But technology is definitely there. So as mentioned, CoinFirm, we in CoinFirm did, I think, a great job for providing this security and this information and data set for centralized entities like centralized exchanges, and they can leverage on that. And we see that this around the world, where centralized exchanges feel pretty comfortable with either some DeFi protocols or with tokens, with different cryptocurrency assets, and banks start to feel more comfortable with that exchanges. We hear much less about situations of closing the accounts compared to a few years ago. And we even have a big cryptocurrency listings on Nasdaq like Coinbase. So for the DeFi, I think we are getting there as well. So as mentioned, there are some technology challenges. Obviously, development of the Oracle and trying to push out the results of multiple petabytes of data warehouse processing to the on-chain protocols was not easy. However, as a first step and as a, let's say, discussion opener with the regulators, that certain protocols definitely want to be compliant. They want to get access to this traditional financing. They want to get access to regulatory solutions and certain benefits of being compliant. I think is a way to go, especially that regulators are aware that enforcing on this ecosystem will do nothing good for both sides. You cannot enforce this. You need to cooperate, and that's why this ecosystem grows so well.
Absolutely. And Andrew, thank you for waiting so patiently. Big panel, but everyone's got some fantastic views. And you've seen both sides of this. We've obviously seen some recommendations from regulators over the last couple of years. Do you feel that perhaps DeFi, crypto in general, is maybe being asked to adhere to a standard that isn't actually adhered to in traditional finance in terms of the kind of the AML procedures? And I'd love to see Ave's perspective on how we onboard companies like Samir's into this space to earn this sweet yield.
Yeah, so I wrote an article in CityAM 2 weeks ago about sort of taking a slightly different approach to both conduct and prudential regulation. Historically, and if you've read Hester Peirce's views, the SEC commissioner's views on sort of this new architecture for finance recently, I think she is one of the people who really understands what's going on, and coming from a senior regulator at that level. The sort of profound and deep understanding of what DeFi is trying to achieve is very encouraging. And I believe that there are other regulators, right, that we've spoken to that share some of that view. So let's think about how regulation has progressed over the last 10 years, especially since the financial crisis. So until 2007, 2008, we were deregulating. When I was at Goldman, and we were pricing these weapons of math destruction, called exotic derivatives and so on. It was pretty deregulated, right? You could innovate all day and with sort of profound math, and it was fascinating. Now, and then there was this sudden overreaction to, I would say overreaction or reaction to the financial crisis. And then we started creating so many rules, right? And every time there was a breakage or sort of a break in one of the rules, like, PPI incident in the UK with the mortgages, then we created more rules to patch those rules, right? So now suddenly we have, then came Dodd-Frank and, Dodd-Frank and Volcker, and we have 700 pages of Volcker rule. We have 5,000 pages of Dodd-Frank. So suddenly we have ended up with so much paper, right? And there is just rules created to fix previous rules, that the banks can't seem to follow, and so on and so forth, right? So, but what we haven't done is we haven't looked at the core issue, which is lack of transparency, right? Lack of transparency, first of all, in how financial services work, and lack of incentives for people to, to sort of adhere to good principles and rules of conduct. So creating more and more rules, and then creating this infrastructure of auditors and more tools in every bank, having 12 different AML compliance tools and whatnot, and sort of tons of reg reporting, and more people in the back office, 10 traders and 100 compliance people for every trader. That's not really worked, right? I don't think that's the direction that regulators want to go in. That's definitely not and that's not address systemic risk. I mean, we still have repo issues. We still have, we're still printing money after all these years, just moving risks into the shadow banking system. So DeFi is sort of saying, let's look at this from the first principles. And the first principles are this. First is, can we automate, right? Can we automate a lot of systems and processes? Secondly, can we improve transparency? And what do we mean by transparency, right? So it's a transparency of logic, right? So if you sort of apply for an Apple card, for example, and it turns out that if you're a woman, then your chances of getting a high credit limit are low, and on an average, you get a lower credit limit. That's impossible in DeFi, right? In DeFi, you can actually look at the source code, see what it's doing. There are on-chain analytics tools and so on and so forth. So DeFi is saying, look, let's look at this from the first principles. Let's see what the regulators are actually trying to achieve in terms of principles and objectives on both on the conduct side and the prudential side. And let's try to, build this infrastructure of finance from the first principles, instead of just taking, this current mass of, tons and tons of paper, which anyways doesn't work, as we noticed with Wirecard, and trying to apply this to this whole new internet-enabled infrastructure where, 5 guys in a room are making all the decisions on behalf of everyone else inside a bank. I mean, that doesn't work. We know that the current approach hasn't worked, and regulators know that as well, right? So I think what Hester Peirce was saying in her speech, and what I think most of the DeFi community will say, is that let's look at where we are trying to go with regulation, and let's try to achieve that. And then I think a lot of people in traditional banks want to do the same thing. Everyone I've spoken to, no one seems to disagree with what we're trying to achieve. Obviously, this technology and this architecture is in its very, very early stages. We are in year 2 of DeFi, if you will, from a scale perspective. The technology has to evolve, the tools have to evolve, the practices have to evolve, and they're all happening at a light speed. And we're not waiting for tons and tons of paper to be written in meetings and all-day meetings to actually build something. So this is a very different way of operating, and I think this is something that policymakers and regulators will encourage increasingly going forward.
So I guess, there's some really, really good points, Adi. I think you're absolutely right in highlighting that it's an imperfect system that's been built out of a crisis, and there needs to certainly be some change in terms of moving away from, let's say, compliance as a tick box exercise and something which is really understood and relevant and actually has purpose. I think I absolutely agree on that. But one of the big things that does come up continuously, and I think Townsend, you probably comment on this a little bit more as well, is what happens when it all goes wrong? Who's liable? Where can I get recourse? And maybe this is an area of DeFi on a few areas which can be slightly problematic. I mean, obviously it's still very new, so we do have a certain amount of smart contract risk with some of the protocols which are out there, and we've kind of seen that. And Townsend, you kind of mentioned before, obviously the custodian side as well. perhaps you'd like to go into that a little bit more, in terms of, you know, what needs to be in place traditionally when you're, you know, you're looking to take on investors' money, and what, you know, what safeguards they need.
Yeah, I mean, in general, I think that, I mean, obviously the technological wave, you know, DeFi, decentralized finance, Bitcoin, distributed ledger technology, it's all about decentralization and disintermediation. And as we've seen, and, you know, I mean, the history of finance has been one of improvements via disintermediation, but the question has always got to be asked, like, what is the actual benefit, and when does that, like, how does it translate? Is it, you know, disintermediation is not always a priori a good thing, right? And I think in many ways there are reams of areas in finance that are ripe for decentralization, mainly because they're just simply inefficient ways to charge end clients money. And that's I mean, those are areas. There are some other areas in the compliance and the legal functions, the frameworks that are there to protect investors. And Ryan, you and I, we worked at Token Market. We talked about this ad nauseum around tokenization. You know, you start taking some of these intermediaries out of the loop. Are you really improving investor protection? And I think, you know, in terms to go back to this question, I mean, it's very much that, you know, investors, you know, a fund manager with holding, let's say, holding Bitcoin or holding something like Bitcoin that then ends up, or any other digital currency, ends up engaging in DeFi for staking rewards, has got underlying fiduciary duties to the client, the investors that manager represents. If they don't have a full understanding of the legal framework, of the risks that Samir was talking about, you know, in particular the credit, what does it actually mean to lend and borrow in this market? Where's the legal consensus? Where's the domicile of the contract? What court do you actually sue under? You know, and to what extent, you know, if something does go wrong, and again, you know, the technologists might tell me that's impossible, and I hope that's the case. I'm not remotely qualified to respond to that. As a lawyer who's been doing kind of finance for a number of years, and then products, like, nothing ever seems impossible that everyone used to say, oh, that's impossible, that never happened. Whether it's the repo markets, whether it was structured products, whether it was, you know, Lehman's going down, the so-called infamous black swan event, investors are going to want to know, at least at a base, they have to report in not only to their investors, but their risk managers. Here are the primary risks that we face, and here's how we can get comfortable for doing this. And that is whether it's an institutional investor, a bank, a family office, any institutional actor is going to have a set of questions and a set of risks and concerns they need answers to. And as a product developer, I mean, these are often the same questions that I'm talking to protocols about, like, you know, help me understand how the staking function works. What are the risks? How the smart contract works? What's the relationship between the validator and the nominator? These are things that ultimately, if we as an industry in the management world are going to build product on DeFi, we need to be able to answer, because one, the regulators will require me to disclose it. If I go and list a product that says, okay, I'm going to provide staking rewards, I have to provide risk factors. There's no way I cannot do that. I mean, I guarantee you, whether it's the SEC, FINMA, UKLA, any regulator I'm going to list this with is going to say, you have to explain these risks to investors. And if I can't do that in a succinct way, it's going to be very difficult to engage meaningfully with this sector. And I'm not saying I can't do that. It's we're working along that, but those questions and still need to be answered. And we're still working through that as product providers.
I mean, there's obviously there's a lot to unbundle there. I mean, in the UK specifically, you know, we've had this thing called a crypto license, right, which has caused no end of pain. I think we've had 200 applications. I think we've had 4 which have been passed, and I think we're going to come into June when you have to have this license, or you can not do business unless you've been grandfathered in. So there's going to be an incredible amount of innovation which potentially just gets stopped as regulators kind of catch up, you know, with what these recommendations should be for companies to be able to operate in this space and to be able to custody, to lend, to trade. So Samir, you obviously work with a few different regulators. You've obviously been doing that in Brazil and also within the US. Do you think there's you know, this needs to come from both sides? Do you think the regulators need to be able to level up in terms of their own knowledge and also to be able to be more in line with some of their recommendations on how these things actually get put in place?
Yeah, that's it's an interesting point, because regulators, they don't have the incentive of being innovators, right? So basically, the market needs to demand product solutions or new ways to do things in order for regulators to move. And I think this is healthy, because we don't want to support like a government infrastructure that is inventing things that not necessarily be good for the markets, right? And so the way I think about it is that first, the digital asset industry needs to evolve and needs to show robustness. All the risks that Towson was saying, we need to clear those out. We need at least to know what the risks are, and to provide a better disclosure to the investors. And I agree totally with him. Any product that we intend to launch, we will need to be very specific on the risk factors. We already are with Bitcoin, right? There's a lot of risks involved in investing in Bitcoin, and we need to disclose all of them. Normally, is the largest part of an offering memorandum is the risk factors, and with DeFi, this will be even larger. So we need to understand those risks, the risks that we can tackle. We need to mitigate, right? So we need to find ways, like we need to find insurance for if anything goes wrong with smart contracts. We need to understand a lot. Each of the assets that we are investing in, whether it's a stable coin or not, doesn't make a difference, because stable coin is just a tokenization of fiat deposits, and we need to make sure that there will not be frauds or loss involved in the valuation of those stable coins. So there's a lot of risks that we need to clear out, and we need to propose to the regulators what is the solution. How do we see is the best way to approach it? And this is what we're doing here in Brazil. That's why we got the approval for this ETF now. It's been a lot of, I'll say, more than 1 year working with regulators, working with banks, financial institutions, to provide the comfort that they need to allow a product like that to go to market. And with DeFi, it would be the same thing. We need to foster the market, to create infrastructure, to clear all those risks that we can mitigate, and of course build a framework to provide the comfort to our investors that we are doing the best in our fiduciary obligations, right? So I don't know if I answered your question, but in my view, I think we need to come to the regulators with a better case and with a lot of demand. So that's when they will move. So for if you see Bitcoin now, regulators are starting to understand and to allow certain things, because the demand is so big that they cannot just keep ignoring this, and I think this will happen eventually with DeFi. I hope that will be sooner rather than later. And if history teaches anything for us, is that things in crypto are happening way faster than we expected, right? Who would expect companies putting treasuries on Bitcoin right now? Just think about this in 2019, end of 2019, or even during the COVID. Think about this. So I really hope that this moves faster rather than slower. But it's a process, and as a regulated industry, we need to handle that, unfortunately.
So just on this point, from everyone who's spoken about this so far, there seems to be a number of different hurdles, and even from the Q&A as well, there seems to be better understanding from regulatory perspective, terminologies, use cases, the custody problem, the liability problem as well. These are a lot of barriers that need to be overcome, yet we're already in a market which has gained rapidly $40 billion under management. Do you think there's a possibility here that simply this just continues on without regulation and gets to a certain point where we almost have a shadow market to traditional finance and they don't really actually get involved? Or you're shaking your head furiously, so clearly not.
No one wants that, right? I think I think we need to stop thinking in terms of regulation as something that's fixed and permanent, and regulation evolves with time as much as technology. Technology typically evolves quickly, right? It's the first to change. Then the markets follow when there is technological innovation, and there is always this dialectic between these things. And technology creates new markets, like this whole new NFT market that's come around, right? That wasn't really there before. And now, when a market is created, then there are legal frameworks that evolve to meet the needs of that market. And typically there is a lag between what's possible with technology and what's possible with the, where sort of the regulators are. And that's the nature of it, right? Regulators often have to respond to markets and technology. So we have seen this with Bitcoin. I've been, talking to banks about Bitcoin since 2015, and a lot of people who now are Bitcoin champions and talk about institutions should buy Bitcoin. I couldn't get a meeting with those guys, right? I mean, so, and now they're completely comfortable with Bitcoin. They're talking about Bitcoin on Twitter and CNBC and whatnot, and I love it. But we are seeing the same thing with DeFi. Now the same folks are saying, DeFi is this, DeFi that. That's fine, right? And it's upon us as the DeFi community and the technologists and so on to educate. And we are seeing a lot of people who are aligned to the mission that we are pursuing, and those people are regulators, lawyers, bankers. A lot of people get where we're going with this, right? And obviously the technology has to evolve. The markets have to be shaped. Regulation is there to protect consumers, right? Regulation is there to sort of create orderly, well-functioning markets, and everyone wants that. If anything, that's what we want to achieve in DeFi 100%. But we don't believe that I don't think anyone really believes, whether it's banks or regulators or engineers or whatever, really believes that the markets as they work today, are working well for the average individual or for the small guy, right? I mean, the rich are getting richer, the poor are getting poorer. That's statistically proven. A lot of people are locked out of the financial system. That's very well known. The financial system does not treat all customers fairly. That's very, very well understood. There is statistics to show that. I mean, SPACs and regulation, all the SPAC stuff that's going on in the US, is that really protecting consumers? I think you could argue both ways, right? Or investors. So there's I think there are lots of issues with the current financial system, and a lot of those can be addressed with, better technology, with more transparency, more automation, more efficiency. So as technologists, we are trying to find a new way, a better way. And then we are getting a lot of support from, regulators, from bankers, from all the participants in the ecosystem, and they're actually talking about it. So it's upon us, as Samir said, to educate and inform, and, to really work with the regulators and everyone else to build just a better system. And I think that's what we're going to do. We're doing more and more at Aave and across the ecosystem. So but here's the good news. Here's the good news. The Rails, going from 0 to Bitcoin took 5 years, right? Going from Bitcoin to ETH and DeFi is a 6 month to a 1 year journey. And because a lot of the infrastructure and the Rails have been laid, now we have to just sort of, say, look, whatever we learned from this process and what can we do going forward? So it's going to happen. It's just a much faster process from here.
Fair points. Jakub, do you think regulators will have the patience to allow this evolution? Because we've seen such a huge growth. I think it's fair to say, and we've kind of looked at this as well from an AML perspective in terms of some of the pools. As much as DeFi, I'm sure it will get there where we enable a number of unbanked people to be able to get staked and what have you. Let's be fair, it's a lot of very rich guys who have held ETH for a while, who are moving money around and doing yield farming, what have you, which is great, right? Because it's not North Korea. It's actually just people who are moving assets around, being able to get in the system and use these kind of protocols. Jakub, you obviously you deal with regulators on a day-to-day basis in terms of recommendations. Where do you think their focus is going to be in the upcoming sort of 6 months to a year, on the timelines that Ajit suggested?
I think, and this will slightly get back to the previous question. So there need to be pressure on the regulators. By themselves, they probably wouldn't be interested on the DeFi so much, if not billions of dollars that were put in by the individual investors. There was a question a few months ago that there is no regulation, but somehow there is still this huge growth and this huge interest and value locked in these protocols. But we need to remember these are mostly individual investors putting in, as mentioned, they funds they earned on getting ETH and having this now, or Bitcoin. A lot of whales being in the sphere for quite some time. But this allows to build the pressure on the regulator and to show them that there is actually a case which needs to which they need to address. And if they have patience, I think this heavily depends on the approach of the ecosystem and the community and the protocols and every market player that is in this market. I think we are past of competing with the regulators and trying to push back against them. Monero, Zika, Samurai Wallet, and all the crypto anarchistic group. That's the everything that comes from the government is bad. Obviously, government is often slow moving, but we see more and more cases where through cooperation with them and showing that we want to go into a certain direction. This is totally new. There is a lot of challenges, not only regulatory ones, but also technical risk mentioned previously. So things like losing the keys or errors in smart contracts or issues in the baseline protocols. For example, currently most of the DeFi is running on ETH. What if there is some critical flaw in Ether that was not yet found, that will be root cause for multiple projects to have some type of technological issue? We need to take that into account. We need to address this, and regulators should be more of a help to build that system, rather than someone we see as a opponent of the change. And I think showing where this is going, and that there's lots of valid market players that have really good intentions, will help getting them on board. And responding to your question more directly, I think they will have a patience. Throughout the years we've worked in CoinFear, we met up with multiple regulators from FATF to the local ones in Asia, in Europe, in the United States. They were always amazed and how this ecosystem is growing and what is able to achieve, and really interested in how they could build a proper structure to let it grow, because at the end of the day, this will benefit local or maybe local ecosystems at the end of the day. So if we have people from Germany earning yield on some protocol, they will spend this fund somewhat. This is it's not zero sum game. There is a lot of gain for everyone.
Brilliant. So I'm very conscious that we've maybe got 8 minutes. Hopefully we can convince the panelists to stay on a little bit longer, because we have a huge bundle of questions coming in. I thought it might be good to actually ask all of you individually, if DeFi does go on and does expand out and really does start getting into the hands of retail customers and the unbanked, so people being able to really realize these excellent interest rates, disintermediation of the various can get in the way of you and allow you to gain these kind of yields. Do we think there'll be a particular tipping point which will really push the market on, or really force institutions to get comfortable with this? I know we've seen regulation, Switzerland, Germany, where banks are looking to start custody. Townsend, do you think there's maybe certain things which are coming up next six to 12 months which will force the issue?
I'll be honest with you. I mean, to go kind of respond to Ajit, I'm a bit of a cynic when it comes to regulators. I think they're incredibly reactionary, and I think the history of Western financial regulation is it takes a crisis for laws to be drafted. If you go back to, the 33 Act, the infamous Securities Law, 34 Act, those were all after the crash when banks and, hawkers were selling fake investments on the street, massive financial disruption. The 40 Act, the Fund Act was, again, a resurgence of people trying to sell pooled investments to people from, booths and essentially defrauding investors. The 80s were marked by regulation after the junk bond crisis, and to jump at 2008. My biggest fear is that the actual event's going to be some kind of flaw or other black swan event that we're not recognizing. I hope that's not the case, because I think this industry is on a fantastic track to actually begin to go to another point that you make, the democratization of finance. Like the fact that the history of the last 20, 25 years has really been about bringing finance to a retail level, lowering fees, and that is really a fantastic endeavor. And I think DeFi ultimately, if it can make that transition to not just providing loans on crypto, but also helping someone secure a mortgage, for example, in a much more efficient fashion with smart contracts and decentralized applications that allow someone to simply just be like, look, I'm going to borrow money. I'm going to find the cheapest deal. We're going to agree this without all the intermediaries, many of whom obviously do impose costs. That will be a great event. So I think it's going to be, I guess, digital. One of those things is going to be the crisis that requires regulators to react, or we're going to see DeFi get more into Main Street, and however long that takes, to where it's not just about the functions of lending digital assets or digital currencies within the ecosystem, but actually branching out to what I call Main Street and helping people access capital to create more value outside of the digital currency universe.
So, I mean, you have a really privileged view over all of this, right? You're getting proposals and AIPs left, right, and center in terms of how people can use the Aave infrastructure and protocol. Which of the areas which you think are potentially most interesting, which will really sort of help the market evolve and push on, and as Townsend said, really allow Main Street to get access.
Yeah, I mean, it's like there is a wonderful book on early stage technology called Crossing the Chasm, right? So DeFi people have been people like Stani have been working on DeFi for at least 4 years. I mean, I consider Bitcoin very much a part of DeFi, right? So Bitcoin is goes back to 2008, and it's a bearer asset, but the fundamental principles are the same. So what DeFi protocols are really doing is, they're extending the capabilities of what Bitcoin is able to accomplish, with more sophisticated networked applications deployed on Web3, right? So let's get that definition out of the way. So with Bitcoin, you can do only so many things. Sure, you can take it to Bitcoin to a centralized platform, and then using grayscale trade or something, create yield and whatnot. Or you can just rely on sort of markets to deliver yields and consumer benefits and so on and so forth. So that's what DeFi really does. And in terms of and consumer adoption is, sort of moves. If you read the book Crossing the Chasm, then there is a chasm, right? So we have early adopters, the apes and degens, and people who have that sort of risk appetite, who are just technology first, who understand things like Solidity, Ethereum, MetaMask. So they were first. That's just how things work, right? That they were the first, even when with e-commerce. And back then, in 1995, it was exactly the same discussion, right? Why are people buying things on the web? And hey, credit cards are getting stolen. I sent a check to California. The stuff never came. Well, who's going to regulate this? I mean, hey, we should shut this damn thing down. And if it wasn't for Al Gore, right, we wouldn't have the internet, and we wouldn't have the trillions of dollars in growth, global growth that we have today, and productivity, right? So I think looking at the future from the lens of the past is an unproductive exercise, and some people are so invested in the past that they simply have to do that, right? But I think this group isn't. So when you sort of look ahead and say, look, okay, we can spend all our day worrying about the risks and all that, or we can also sort of balance that with the size of the opportunity we are looking at, right? So, I mean, the global financial system is sort of the bedrock of the global economy. And the question is, okay, with a 60 billion experiment in market cap, and compared to, let's say, 15 trillion in US equities, we're still looking at a rounding error. So with this small experiment that we've got going on, right, what's the potential of this? And then as technologists, as financial services people, as regulators, as lawyers, as policymakers, what can we actually do together to realize it, right? And we need an algor. Sure, we need an algor of Web3. We need innovators, and innovators will keep innovating. We're going to continue to build. And then we also need people from institutions, and they are coming. So, I mean, you have web apps and neobanks that are already starting to integrate. You have crypto custodians, regulated entities, and banks that are starting to integrate. You have exchange traded products that are being launched. So adoption is already happening, and it will always be led by people who sort of are more focused on opportunity than on the risks, right? I mean, if you only worry about risks, and if you say, oh, if we actually fly on this jet, we're all going to die. I mean, or we'll never get to Mars, right? If we don't go along with Elon Musk's program. So I think at some point we have to start to sort of shift the conversation and say, where can we actually get with this, right? And then, okay, let's manage the risks. The risks have to be managed. We don't, shut the shop down because, oh, there is a bunch of risks. We manage the risks and we deliver the opportunity. And all of that is happening today in partnerships with regulated institutions. Small
Fantastic.
Scale, it's going to grow.
Small, and then it happens and it goes big. Samir, you're at the tip of the spear from the kind of institutional angle. What do you think will be the thing that really kicks this on and brings your AUM figure, sky high after the initial launch?
So the way I see DeFi, more than the staking opportunity or getting higher yields on short term, because I think this is not sustainable, right? Once real money starting coming in, and this market is not only like 40 billion, will be 400 billion or $4 trillion. Those yields will convert to market rates, and things will converge basically. So the things that fascinates most me about DeFi, the potential of creating a new financial infrastructure, right? And I'm fascinated by history of financial markets, and I think that the interesting thing to say here is that the financial market that we have today was created to solve essential problems from the 19th century, right? Which was basically information asymmetry and lack of trust, right? So people were going to the streets to negotiate bonds and stocks. Anyone could issue new titles and trade directly on the streets. You had no information. You have no way to price those things in different markets. If I'm in New York and you're in Chicago, we cannot basically trade, but we have like days to negotiate. I cannot trust one another, so there's a huge counterparty risk. And then those intermediaries started to come up to solve problems. So we've got custodians, brokers, exchanges, banks, and this created this whole financial infrastructure that we use today. That is very efficient in some ways, but like I just want to say, it's definitely not working on the best interest of the small investors. But it was created to solve those two basic problems. And information asymmetry we already solved with the internet, and lack of trust we're solving now with the blockchain, right? So we have this opportunity, like Ajit said, to create something from ground up, where we could have like a global marketplace where we could issue assets on each jurisdictions. Like I can issue stocks here in Brazil, and of course I need to be compliant with the issuance regulations here, with the CVM here, with FCA in the UK if you issue in the UK. But then you issue this asset on a blockchain, and then you have the two basic grounds. You have asset issuance and have custody. And after you have those two premises working, you start to have some building blocks like collateral management, like delivery versus payment, and then you can start building a whole set of applications to replicate and have a better market than what we have now, and a global market with no gatekeepers, with no information asymmetry, with no barriers of entry. We can have a Japanese investor investing in real estate here in Copacabana Beach, with no red tape, no bureaucracy, just using the blockchain. So I think that's the huge potential, and that's where things will. That's when DeFi will actually deliver, will transform the society basically. This is what I believe. It's not a process that will happen in 1 or 2 years like we want to. I really wanted that. I think this is more. Probably more than 10 years to happen. But I think that we can only get there if we start building blocks and step by step and making the traditional investors comfortable with the setup. And if you can start staking, that's a good point. And then we can start maybe with automated market makers and delivery versus payment, right? So let's do settlement more efficiently without the counterparty risk, and then start moving slowly. And once we see we're already using the blockchain, and the traditional financial markets players, they are using the blockchain because the marginal cost is so low that to replicate this in-house is too costly and wouldn't make sense for them. right? Because of competitive, because of I mean, it will not be competitive for them to build everything in house, to do this trust work in house. They would basically outsource this to a software on the blockchain, which would be way more efficient. So that's I think that's the huge opportunity on DeFi.
So there you go. All of you mid-level bankers quaking in your boots, you are going to be further taken out of the loop and replaced by a software. I think it's a really good point you make, Samir, about the asymmetric access to data and information. And then I think what we've seen as well, democratization of access as well within DeFi is a really big driving factor. And then just in this microcosm of COVID and also stuff that's been going on with the Reddit Wall Street Bets group and GME, where we've seen that perhaps you're not getting such a fair shake as an investor going through certain platforms. And I think we've got these really, really large factors, which could really drive the industry on. Jakub, I'd love to hear some of your thoughts on what you think are going to be the main drivers for the sort of further adoption. I think we put in the description notes for the $100 billion under the sort of DeFi protocol space. How do we get there?
Yeah, I think following up to what Samir said, is the current banking system is definitely not fair and definitely not optimized. There is a lot of wasted opportunities there. However, it will be hard to imagine the growth of any economy over past 20 or 30 or 40 years without that system. It's even though it's ineffective in a lot of the ways, it allowed us to build what we have today as a society, with quick transfer of goods between East Asia throughout Europe to US to Africa to South America, etc. Created this global economy, and I think the blockchain is the next step. So we'll see a lot of initial inefficiency, a lot of challenges, and a lot of probably pushback from, let's say, more traditional players. However, I believe that after next 20 or 30 years, it will be hard to imagine, a society without the system we are building today.
Fantastic. I realise I've kept you guys 6 minutes over the allotted time slot. Townsend already has abandoned us, so it's probably a good time for us to just wrap things up. I just want to say thank you so much for spending the time and for such a good in-depth conversation around this obviously tremendous market that has evolved overnight. For all of the attendees, thank you so much for attending. We will be making the recording available, so if you did miss any snippets, please do have a look out. Channels will email everybody out. Also, panelists, if you're comfortable, happy to share your kind of like Twitter tags, emails to those who are registered via email. If you're okay with that, we'd be happy to sort of push that out as well. But again, thank you so much for joining us. Brilliant, spirited conversation, and no doubt it will be a topic we go into a bit further on some of these webinars at a later stage. So yeah, thank you guys, and speak soon.